Hi, good evening, everyone. I hope I am audible. Let me take a quick check from Vikash. Vikash, am I audible?
Am I?
Yes, yes, you are audible, and I'm also audible, I believe.
Yeah, you are. You are.
Great, great. Thank you for joining. So, we will start in exactly 2 minutes from now. So, at exactly 9 o'clock. Okay, so here we go. Good evening, everyone. This is your host, Vivek Bajaj. This is the first time I'm doing Twitter space. So pardon if I do any mistake, if I commit any mistake. I've been so used to doing YouTube face to face that I'm used to camera now. But for the first time, I'm going to just not face anything, just facing my wall and talking to our guest Vikash. Before I, take Vikash on board and we talk a lot about currency, let me thank all of you for joining on Sunday. It's a special day always, but I see that you guys have joined. I think there are almost 400 people here live. So that really means a lot to me. So thank you so much. And also, thank you so much for motivating me to do more face to face and, to talk to you guys more and bring on board more experts to decode this complex science of financial market, which we are quite used to. Well, I'm going to talk about a very, very amazing, subject today, which is currency market. And I always tell this to people that we should aspire to become multi-asset trader or multi-asset market participant. You know, something what we have seen in last 1.5, 2 years, where lot of first timers have come into the market and they are looking at Thursday expiries, bank nifty strategies, and whatnot. And obviously, I'm also part of that ecosystem where a lot of my face to face is focused around bank nifty and Thursday expiries. Well, that's probably the need of the hour. But I would sincerely advise for people who have come on board recently that do not look at market on a standalone strategy basis. Try to develop a macro perspective about the market, because if you are here in the market, you are here for a longer tenure. And as a speaker, all right. So Vikash, hello, good evening, Vikash. Vikash, you are in mute.
Yeah. Yeah.
Yeah, hi, good evening.
Vivek. Sorry. I think there was some technical issue, got disconnected, and it took some time for me to come back.
Not a problem, not a problem. We didn't miss you much because I was, as usual, I was busy doing my babbling. So, okay. So before I involve Vikash into this discussion, let me clarify that coincidentally, both of us are Bajaj. There is no blood relationship, but there is definitely market relationship. We know each other since last, I guess, almost 15 years, Vikash, when you were part of NCDX commodities and I started my career in commodities. And they're all.
I think we first time met in 2005 when I was part of NCDX, and you were just starting your career as a trader in with your company.
Yeah, yeah. So those were the
Yeah.
times when money
Yeah.
making was relatively easier and more predictable. And I guess it's not much complicated. I mean, even right now, at every market condition, there is some asset class which gives opportunity to make that easy money. And I've seen Thursday expiry, short-term options trading, selling. It has been quite a reasonable ride for a lot of people in last 2 to 3 years. But today's context is more currency. So tell me, Vikash, I mean, I'm going to add wherever I feel that I can add value to this, because currency is closest to my heart. I started with commodities and then added currency. And at some point of time, I was, one of the largest volume creator in currency exchanges in India. And Vikash knows this quite well. But Vikash,
Yeah.
tell me why we should follow US dollar.
Okay, so before I answer your question, uh, I think I just want to say hello to everyone and a very good evening. And I will try my best to answer your question in as simple manner as possible. So before I give this answer to this specific question, for the background setup, let me tell to a lot of people who are first time to the currency market, that trading in currency started just 50 years back. I mean, if you ask me the birth date for currency trading, it is exactly August 15, 1971. So before that, uh, I mean, currency trading was not freely traded. I mean, it was not freely traded, and post Bretton Woods, all other currencies were pegged to dollar. And in 1971, Richard Nixon did away with the gold standard, and that was the birth of the dollar standard. And uh, in last 50 years exactly, we just I mean, August 15 has just passed by. 50 years, currency has become the world's most traded and liquid market. uh, and it has started off with I think two objectives: uh, international trade and investment, and hedging the currency risk. And I mean, today as we speak, as per the latest data which is available from BIS, the average daily turnover in currency market is 6.69 trillion dollar. I mean, it is much bigger than any other market you can think of. So I think this kind of gives a background of currency, that in last 50 years it has become the most traded asset class. So Vivek, now coming to your question, why dollar? Again, let me give the context for everyone here. Uh, so I will start with FX as a whole, and then I will slowly move down to the dollar. So the way I look at
Sure.
it, FX is the a medium of exchange uh, for all asset classes, whether you are buying or selling any product, be it on equities, commodities, or bond. And dollar sits at the top of this financial market. I mean, so the question which you asked, why dollar? So dollar sits at the top of this, apex of the financial market, and
Mhm.
uh, I mean, and and dollar is called as king, or I mean, gold standard has been completely replaced by today dollar standard. We live in a dollar standard world today, and
Mhm.
given the liquidity and depth that FX market has today, I mean, reacts to any news immediately. I mean, I would say that it is like the first derivative to any market moving news, be it on the political side, economic side, social, or geopolitical. So,
Mhm.
uh, I mean, that is where the FX becomes very important, and dollar sits at the top of it. So, just to give a few more data points so that we can understand the importance of dollar. So,
Mhm.
88% of the global FX transactions, I mean, FX transactions, if you see, dollar is one of the currency pair. So,
Mhm.
if you look at it, I mean, the average daily volume is $6.6 trillion. Out of that, 88% of the transactions which happen in FX, dollar is one of the currency pair. So,
Mhm.
if we look at dollar rupee, I mean, USD is one of the pair in that. Uh,
Mhm.
Dollar almost constitutes about 60% of the global reserve.
Mhm.
So again, I mean, uh, I mean, no other currency comes near to it. And
Mhm.
if you look at dollar, it accounts for almost 70% of the global trade denominated. I mean,
Mhm.
uh, whether it is on the invoicing side or any other global transaction, 70% of it happens in dollar.
Uh-huh.
So all this makes dollar the uh, uh, most important asset to look at it. So
Right.
that's my point.
Absolutely. So that's pretty much well cleared, and the data speaks for itself. Now let's talk about INR part of dollar. I mean, I always say this to people that when we are saying USD INR, we are not talking about one instrument here. We are talking about USD as a separate instrument and INR as a separate instrument. So let's talk about INR, because that why for all of us it's important to look at that magical number of INR if at all we are thinking of defining a long-term strategy for ourselves. So talk about INR.
So you know, when we look at INR, it is one part of the pair. I mean,
Mhm.
USD INR. So obviously, I mean, when dollar moves, we see some movement in the dollar INR pair, and
Mhm.
when we look at currency trading, I mean, it has two parts. Uh, One is the base currency, and second is the quote currency here. So dollar remains the base, and INR is the quote currency. And
Mhm.
any movement in the currency pair, I mean, whether dollar rupee or euro USD, it depends upon the movement of each currency.
Mhm.
It depends upon the movement of each currencies, and we have to understand that how they interact to each other. So
Mhm.
when we talk about dollar, we talk about dollar index. I mean, that's the most tracked thing in the world in FX. So
Mhm.
we understand that if dollar index moves from say 93 to 94, it is
Mhm.
assumed that dollar rupee also tend to go higher. Uh, but
Mhm.
but I mean, if we look at the different currency pairs which gets traded against dollar, so like say dollar INR, and then if I take the example of say dollar CNH or dollar CNY, which is for the Chinese currency, the
Mhm.
relative movement will be much lower. So while
Mhm.
it may happen that against the dollar, CNH might weaken by 0.5%, rupee might weaken by quarter of percent, and
Mhm.
that's where the local currency factors, macro factors comes into picture. That
Mhm.
how is the economy doing? What is the growth rate? How the trade is looking like? Uh,
Mhm.
and this is where the local domestic factors comes into the picture.
Mhm. Mhm. True.
Yeah.
True. So, Vikas, I mean, I represent that part of the US dollar INR market, which is trading futures day in and day out. And, when I started this in August 2008, which was when NSE got the first license to launch the futures, I was more of a scalper looking at the spot market movement and trying to capitalize on any, information lag or arbitrage available at that moment. And it was great market to make money, very honestly. Obviously, the market is not same anymore. But you all represent a segment which is dealing with corporates. I mean, you are heading the currency and the IRF market in Kotak Securities, and you are interacting with various corporates for their hedging needs. And obviously, you have retail client, but largely, I'm seeing that you do interact with a lot of corporates. Now,
Yeah.
tell me, how is the currency market in India, the spot currency market? Let's park our discussion related to futures and options for some time.
Hmm.
How does the spot currency market works in India?
Uh, So, uh, see, I mean, OTC spot basically trades in the OTC market, what we also known as the interbank. And
Hmm.
before the futures market were introduced in 2009,
Hmm.
this market was mainly confined, or I would say that restricted to the banks and corporates. Uh,
Hmm.
so I mean, if I look at any corporate, I mean, they have mainly two activities. One is for the hedging purpose. I mean, where if I am an exporter or importer, I need to hedge my the FX risk, and and second is if I am doing some bit of trading. So when I'm so a spot in that comes into the picture if I am basically trying to convert my dollar into INR or vice versa. So if I am an importer, I need to buy dollar, and if I am an exporter, I need to sell dollar. So
Hmm.
spot and forward are the two things which are traded in the interbank market. And
Hmm.
for all the practical purpose, I mean, forward is a very small market compared to the spot. So spot becomes the kind of benchmark for everything for corporates, and they look at the spot market, and if in case I need to hedge say 3 months down the line or 6 months down the line, spot
Hmm.
plus forward put together, I decide the hedging.
Hmm. Right. So largely corporates do it, use it for their export and import hedging purpose. But whatever I know, talking to a lot of my friends in various treasury departments of these large corporates, currency is actually one of the great speculative instrument for them because of the margin benefit, the leverage one enjoys in currency. So I mean, you don't have to specify names, but do you see corporates speculating big time using currency, spot market or forward market, or they can't because there is always an obligation on the other side?
No, so I am saying I would not say that I mean some bit of trading is always involved.
Mhm.
The managing your risk. So if you ask me, I mean there are I mean very few corporates who go for 100% hedging. I mean each corporate would
Mhm.
have their own risk defined policy, and basis
Mhm.
that they manage their FX risk. And while doing this, active risk management, some bit of trading also gets involved into it. Uh, uh, but normally, I mean, if you ask me, these risk management policies are board mandated. So
Mhm.
it is not that they rampantly do the trading. I mean, whatever
Mhm.
trading we keep hearing, it is a part of, their overall risk management.
Sure, sure, sure.
Yeah.
Okay, so let's come back to the retail trader perspective because I think that's where all of us are interested in knowing about it. That why why it is important for us to trade currency or at least start looking at it in current market scenario vis-a-vis equity market, which has more glamour, which has more volatility, and currency is supposed to be, a dull instrument where you may not get the desired volatility same day, but it does offer you higher leverage because I believe the overall margin requirement is currency is what, 2.5%?
Uh, if you ask me, dollar rupee, it is between 2.5 to 3%. Uh,
Mm-hmm.
and for all the INRs pair put together, it will vary from 2.5 to 2.5 to 5%. So for pairs like GBP INR and all, the margins may be higher, but for all the INR pairs which are traded on Indian exchanges, uh, the dollar rupee has the lowest. And if in case I have to put it in per lot terms, it comes
Mm-hmm.
out to be approx around 2000 rupees. Obviously, I mean, depending upon volatility, it may shoot up to 2200. And if in case there is very, very less volatility, it may even undershoot to 2000 rupees. So, as a thumb rule, for dollar rupee, I can say that the margin required per lot is 2000 rupees. And
Okay.
and that is where I think it becomes very interesting for the individual traders,
Mhm.
because after September 1st, we all know that peak margin has got introduced, and intraday leverage has been completely taken off. And
Mhm.
I mean, if someone is there with 50K margin or 75K margin, or even for that
Mhm.
matter 1 lakh, I mean, it is difficult for them to express any view in the Nifty or Bank Nifty, because of
Mhm.
the higher margin required. And that is where dollar rupee can, or currency market in India can emerge as an alternative for
Mhm.
such individual traders who don't have high margin available with them.
Mhm. Mhm.
Yeah.
So,
uh,
I mean, just want to taking forward that point that even one of the large discount booking firms founder said that the average balance of people who have come into the market recently is quite less, and we should not expect that this market is going to be full of depth and it is a mature market because the new guys don't have much capital with the brokers. So
hmm,
considering that, say let's take an example, hypothetical number, say 50,000 rupees someone has. So
yeah.
with the new margin rule, obviously the tendency of that person will be to go towards option buying
Hmm,
because that's where, or probably option spread trading because that's where you can actually play the market with such a small capital. Or
hmm.
the other option is that start looking at currency for active trading. But the problem is that currency is, I guess, it's only volatile. Average volatility is 1.25, 0.3% every day.
Yeah,
Or
yeah.
did I, yeah.
Yeah. So for
So
dollar rupee,
which is too less.
yeah.
So which is too less. So how do one generate a better ROE vis-a-vis say, active trading in options with that small capital?
I mean, I think this is the most frequent questions which I am being asked, that the dollar rupee has much lower volatility. But I
Mm-hmm.
my answer to this has always been that this is broadly being compensated by the higher leverage which currency offers. So,
Okay.
I mean, if I say that the average margin required in USD INR is say 3%, which is also, I
Mm-hmm.
think, in the normal circumstances, slightly higher side, and for
Mm-hmm.
Nifty it is 15%, right? So,
Mm-hmm.
I mean, the margin is one fifth of it, and
Mm-hmm.
as a thumb rule, I say that the impact is one fifth. So, uh, I
Mm-hmm.
mean, if dollar rupee moves by 0.2% and
Mm-hmm.
uh, Nifty moves by 1%, the probably your ROI would come out to be the same. So
Mm-hmm.
while your margin, while the volatility may be lower, but
Mm-hmm.
because of the higher leverage, it makes up for that.
I buy your point. I think that made a lot of sense. Now let's talk about if suppose we have to start making that bold move of predicting what will happen to USD INR. I know
Hmm.
it's not an easy thing to do, but probably at times because of the inherent nature of that instrument, you are able to predict it because there is already a reference price for dollar index. But
Hmm.
please tell us the key factors which influence the regular flow of regular volatility in USD INR.
Uh, uh,
I, I'll rephrase this question. This is again from a trader's perspective, okay? Because
yeah.
as a long-term portfolio manager who also wants to diversify by putting some exposure in currency market because of broader economic parameters like broader interest rates prediction or fiscal deficit, etc. So those are more longer tenure calls one person takes. But let's
Hmm.
talk about traders for the time being that if I have to participate in short-term volatilities in USD INR, what are the
Hmm.
key factors to look at?
Okay. So I think, I mean, obviously the first thing to start tracking would be the dollar index. I mean,
Mhm,
it has the very large impact on how dollar rupee is likely to, I mean, how it is going to make an impact on the dollar rupee, and we do cover in our daily report about this. So one is dollar index, then oil is the second factor, which, in my opinion, needs to be tracked, because if oil prices keep moving higher, I mean, it does impact the rupee, because higher the oil prices goes, it is more negative for rupee. So
mhm,
dollar index, oil, and third most important factor, the way I look at, is the capital flows,
mhm,
which is nothing but the FPI money moving in, uh, F-
mhm,
FDI, private flows, private equity, and VCs. But
mhm,
for the benefit of everyone, I think to start off with, we need to watch that how is the FPI money, what is the kind of activity we are seeing there. I mean, whether
mhm,
FPIs are bringing money in India, because anyway,
mhm,
since we do track, I mean, since most of us would be trading in equities, so we do kind of track the FPI's movement every day. So that kind of gives an idea that how it is likely to impact the dollar rupee as well. So there are other also which we need to look at it. I mean, because volatility regimes keep shifting, right? So right
mhm,
now, as we are talking or getting concerned about the situation in China, uh,
mhm,
so it is also important to track the CNH.
mhm,
How the
mhm,
Chinese currency is moving. Because I mean, in equity, we do track, before the our market opens, that, what is the Singapore Nifty, how is Hang Seng, how is Nikkei. So on a similar
mhm,
line, in currencies also, we do need to track how is the dollar Asia is behaving. When I say
mhm,
dollar Asia, I would suggest that rather than looking at whole host of currencies for a lot of countries, better is that we watch the USD CNH. which
Mm-hmm.
uh, basically reflects the China and
Mm-hmm.
dollar index and oil. If all three, four things put together, if we watch, we can
Mm-hmm.
broadly understand the dollar movement. I mean,
Mm-hmm.
Vivek, there can be a whole list, laundry list of things which we need to track. But to start off with,
Mm-hmm.
I mean, just to share something here, I mean, of late I have been interacting a lot with my retail customers, and
Mm-hmm.
one thing I realized that people are not even aware that while trading in currency, what I need to look at it, and that's
Mm-hmm.
why I mean we have been in the last few months have started emphasizing about the different factors which I mean through our I mean social media handles and our research reports that at least start looking at these four factors, and once you start getting a grip on things, we can
Mm-hmm.
continue to add more and more things to it. I mean, it's like I just want, I mean, these get a hang of it, these four things, and then we can suggest you ki, obviously, I mean, bond yields are also important to watch, you know then how are the global equities doing. But to start off with, I mean, dollar index remains at the top of everything. Oil, how is the capital flows, and at least I would prefer, given the situation in China, that we need to track USD CNH.
Sure, sure. So I
Yeah,
think first two pointers are pretty clear. The way you have explained dollar and the crude oil, and I believe
yeah,
when we talk about crude oil, Brent becomes an important benchmark for India rather than looking at WTI for this purpose at least. Uh,
yeah,
but the third point, which is capital flow.
yeah,
Now, I mean, you have been a great contributor to the stock edge evolution, where you wanted a capital flow data in stock edge. So we gave a FPI data which included equity market as well as bond market. So if
yeah,
people go to CM SEBI in stock edge, there is a data. There's an FI section where you go and you see there's something called CM SEBI, which consists of how much money these FPIs are putting in equity as well as in bond market,
right,
including primary issues as well as the secondary issues. So if you combine everything, you get to see more or less the flow of FPI into Indian market. Uh,
right.
but Vikash, what about FDI? How do we track what FDIs are doing? Apart from the news articles that this much money came into Reliance, this much was invested in this startup, etc., etc. Is there any concrete source for a cumulative FDI flows in India?
So basically, there are two sources through which one can track the FDI data. But Vivek, that data is made available to the public with a lag, right? I mean,
Mm, mm,
but one can get the FDI data from the RBI monthly bulletin, which comes with a 1 month lag, and RBI
mhm,
bulletin comes every month. So
mhm,
one can get the FDI data from there. And second, I think Department of Industrial Promotion also, which is responsible for clearing these FDI deals in India. They
mhm,
also disclose the FDI data on a with a one-time, a 1 month lag. But Vivek,
mhm,
I just want to highlight one thing. I mean, see, I mean, we are living in a very evolving world. I mean, things keep changing. So FPI, FDI. Now, I mean, you know that a lot of money is flowing into the startup world, uh, which
mhm,
which we term as a private flow,
mhm,
right? So FDI is the most stable of all the capital flows which we talk about, right? I mean, normally these are where some foreign investors are coming and uh, putting a plant here, or like Hyundai coming in and saying, I want to set up a plant here for manufacturing car, all that. So that
mhm,
money, I mean, from the FX perspective, while large inflow does matter, because I mean it influences the dollar rupee, but
mhm,
from the volatility perspective, the most important thing is the FPI flow. I mean,
mhm,
what is
mhm,
happening on equity and debt. So just to give you an example, like say last March 2020, when the COVID hit, there was a huge capital outflow which happened. So if somebody
mhm,
goes on the NSDL website where the FPI and FPI data, FII's data is made available, uh,
mhm,
one can see that there was a huge selling by FIIs in both equity and debt put together. I mean, obviously, I mean,
Mm-hmm.
for me, I don't go to NSDL, I go to a stockage and see that. So
Mm-hmm.
I mean, both equity and debt, 60,000 crore selling was there, and that kind of
Mm-hmm.
put a pressure on the rupee. So because
Mm-hmm.
FPI money is more volatile than the FDI, so
Mm-hmm.
I think while I mean, yes, if you are I mean, somebody is looking to go deep into it, I mean, one can start tracking the FDI, but from
Mm-hmm.
short term move, FPI flow is more important than FDI.
Sure,
Completely from
sure,
the
sure.
retail
Point taken.
perspective or the individual perspective, looking to do the short term trades.
Sure, sure.
Yeah.
Point taken. So because you have very smartly carry off one point, and I'm sure that you have reasons to do that. We have not talked about RBI intervention, and
Yeah.
I'm not going to let you not talk about it because RBI becomes a very important player in currency market because that's their role to make sure that volatility is as per their objective.
Hmm.
So would you like to talk about it that how do one identify when RBI is present in the market?
Okay. So, I mean, RBI intervention, I mean, first of all, let me explain that, I mean, RBI, as you rightly said, intervenes in the market to smoothen the volatility. And that is where, you know, let me, I mean, come back to the point that where currency becomes attractive for the, individual traders.
Mm-hmm.
Because, we have, central bank there is active in the market to manage the volatility. I mean, while we have seen last March, the wild swings in Nifty. But
Mm-hmm.
if you look at the dollar rupee movement at the same time, I would not say that it was not volatile. Obviously, I mean, it moved from 72 half to 76, 70, 78 in just 2 months time frame. But the
Mm-hmm.
given the context and the risk environment at that point of time, the rupee move, I would say that it was very sublime compared to the some of other emerging market currencies. So now coming back to the RBI intervention part, so RBI objective is to smoothen the volatility, and so here, I mean, it's very difficult to figure it out exactly that when RBI intervenes in the market, but
Mm-hmm.
there is something called as a what is the central bank biasness or historical biasness, and
Mm-hmm.
I will touch upon this point because it is important to understand. I mean, so if you look at the comments or the speeches by the central bank governors, deputy governors, or the statements in the media, uh, one can make out that the what is their biasness. So if you ask me,
Mm-hmm.
I mean, this is completely my own individual view that right now the biasness of the central bank or the RBI looks like to be they don't want a very strong rupee.
Mm-hmm.
I mean, while somebody can come and debate with me on that point, but if I
Mm-hmm.
look at the the way I mean central bank governor has made this comment at different point of time, the biasness looks to be that they want the rupee to trade around a fair value or with a slight weakness biasness. So,
Mm-hmm.
I mean, if you ask me, I mean, I've been in the FX market for the last 12 years, 13 years. And if you ask me,
Mm-hmm.
is RBI going to intervene today? Probably I will not be able to tell you. We all get to know
Mm-hmm.
post the intervention. But if we see a pattern that, while dollar rupee coming to around 73 level, we are hearing that RBI is there in the market. And then again, it came back, so every time dollar rupee is coming to 73 level and we see that some invisible hand is there in the market on the bid, then
Mm-hmm.
kind of, it gets confirmed that, they don't want the rupee to appreciate below 73. And it's
Mm-hmm.
also important to understand what is the government, intent at that point of time. So,
Mm-hmm.
uh, uh, so if you see right now, government is kind of, coming out with a lot of policies to support export from India. After China one policy, we are Government of India is promoting Atmanirbhar Bharat. They are promoting, PLI. They are coming out with PLI schemes for different sectors. Now,
mm,
obviously, when you have to promote export, currency is one of the tools to support that, right?
mm, mm,
If you think both that, what is the government intent right now? They definitely want India to emerge as a, or if you look at even the comment from Piyush Goyal, who is the Minister of Commerce, that we want to have a $400 billion exports. These are the so when you look at this and when you look at the RBI comments in media and speeches, then you connect and see that probably their biasness is that they don't want the rupee to appreciate too much.
mm.
So, so
I
that
think
and and and,
it's
and sometimes
yeah.
sometimes it also depends upon the RBI governor, what is their
Mhm,
thought process. So that is, I don't want the individual to get so deep into it. For that we
mhm,
are there to kind of keep updating them as and when we understand that what is the intent and if there has been any change in the intent. So just to give you an example, like say Urjit Patel. So before
mm,
our present governor Urjit Patel was there, and if somebody would look at his speeches and comments, one can easily make out that he was a slightly hawkish central bank governor.
mm,
Whereas
mm,
our
mm,
present central bank governor is more on, I would say that a practical person, and probably
mm,
both
mm,
of them, central bank and the government are working in tandem.
mm. Uh, I totally would recommend everyone to follow Vikas' Twitter handle because any major update with respect to any action which can have an impact on currency market, I think his handle is the best handle to follow right now, whatever I know. So you can just click his lovely pic right now and just follow him. Uh, well, I have no commercial interest in asking people to follow him, by the way. Anyways, let's go back. Vikash,
Yeah.
RBI is definitely one agency which we all have to start following very closely. As a financial market guys, we know what SEBI is doing, and all of us are literally on our toes, waiting for new circular from SEBI. Whereas if someone wants to become a financial currency market participant, then RBI becomes important. Now, tell me, what are the important communications which we should track to to try to draw some inference about the market. I'll give an example. How do I track liquidity in the system? People keep on saying that liquidity has gone down, liquidity has gone up. So, what's the benchmark? How do you track it? Or is there any periodical bulletin by RBI? You have said talked about monthly bulletin, but I believe there is also something called Friday release, where every Friday RBI comes out with a balance sheet or data something to figure to show what is actually happening in the financial system.
See, RBI issues a lot of economic data. If somebody loves to play with the data, I think, it is a treasure trove. From again our perspective, two, three data, things which we do track very closely. So for liquidity, every day RBI publishes a money market, operations report, which comes in the morning, which where it gives a sense that what is the liquidity in the system. So right now, as we are talking, I think overall systemic liquidity is around 12 lakh crores in the system. Is I'm talking about in the banking system. But from
Mhm.
FX perspective, from the USD INR perspective, one data point which we obviously track on every Friday is the RBI comes out with what is the movement in the FX reserves.
Okay.
So FX reserve is again a very important data point to know that because it is the first line of defense. So Vivek, just
Mhm.
to give you a context, like say if tomorrow something goes wrong and there is a sharp sell-off in the equity market, bond market, and global risk sentiment turns sour, and FPIs start pulling out dollar from India. So
Mhm.
the first line of defense at that point of time uh, uh, becomes your FX reserves. So when
Mhm,
we look at, I mean, today as we are talking, I mean, India has the record FX reserves, and if I'm not mistaken, India FX reserve is now fourth largest in the world. And
mhm,
I mean, that gives a lot of comfort that, in case of any major adverse market situation, probably the movement in dollar rupee, I mean, or the INR weakness would be less than some of its peer currencies. So
mhm,
just
mhm,
to give a historical perspective here. Now, I mean, while in equities we keep talking about 2008 global financial crisis, I mean, we all know, but
mhm.
for the rupee, the most volatile time frame, if I have to say, was 2013 taper tantrum.
Okay.
So I mean, while so some of us who keep looking at that rupee has been less volatile, but if somebody wants to understand that how volatile was rupee at that point of time, just to give a reference to them, in between May 2013 to September 2015, dollar
Mhm,
rupee moved up by almost 14 rupees in just 5 months. Now, obviously,
mhm,
the
mhm,
context was different at that point of time. India was part of Fragile Five. There was Tapper Tantrum. There was, the FPIs were pulling out of India, and all the macro factors which you could which you could think for, the local currency, whether in terms of our trade number, whether it in terms of fiscal inflation, all were, at the uh, at the possible low, and
mhm,
that kind of made the rupee very, very vulnerable. So, and at
mhm,
that point of time when all this thing was happening, right, in the FX market, uh, uh, I mean, our FX, I mean, while central bank, as I said, their main objective is to smoothen the volatility, but they still,
mhm,
I mean, they were also tied up because our FX reserves was not that great or healthy.
mhm, mhm,
Because I mean, our FX reserves, if you look at it, I mean, is on account of these flows which we keep getting in, and it is not on account of
mhm,
export earnings.
mhm,
So it
mhm,
is not earned. It is like, 'cause it is a borrowed capital for you. So
mhm,
when we look at our FX reserves, it is at 640, looks very healthy. So it looks like, say, tomorrow there is a capital outflow of, say, 10 billion, 20 billion because of some global event. I mean,
mhm,
RBI can very easily, support that. I mean, if they wish to do. So,
mhm, mhm,
FX reserves is a very important, data point which we track from the,
mhm.
FX market perspective.
Right. Because I want to talk about this FX reserve for some more minutes.
Yeah, yeah.
So what we know about RBI is the open market operation, which they undertake to protect the volatility. So whenever they feel that global markets are suggesting high volatility in dollar, they will come in and start selling dollar from this FX reserve, right? And then when they feel that it's time to pump up the dollar, so they will buy it. So do you think FX reserve is their main tool to do this open market operation?
Uh, okay, so FX reserve, Vivek, as I said, is the first line of defense. Now,
Okay.
the second line of defense, so I mean, if you, uh, I mean, if you look at the in the past, I mean, uh, as I said in 2013, the FX reserves was not sufficient because you cannot go and keep spending your all dollar reserves in defending your currency. I mean, at the end of
Hmm.
the
Hmm.
day, if FPIs are pulling out their money, you cannot say that you cannot, right? I mean, otherwise you will. I mean, it doesn't look good in the global space. So
Hmm.
the second line of defense, then they start trying to protect it from the interest rate perspective.
Hmm.
Okay, where they start increasing the interest rate for the local currency, for the INR basically. So
Okay.
if I'm not mistaken, in 2013, RBI increased the interest rate overnight by 200 basis point. So
Hmm.
this is again, I mean, very common by in emerging market space where central bank, if they don't have enough reserves,
Hmm.
they resort to the interest rate, as a measure to contain the capital outflow. Because
Right.
because if you increase the interest rate, it is understood that your attractiveness for your currency increases,
Right,
because
right, right,
you get slightly more return or carry, and because of which probably there may be lesser of capital outflow.
right, right. So
Yeah.
that this brings me to my another favorite topic is the relationship between yield and forex. So we all know that in US, the moment we start talking about yield curve going up, and typically when we talk about yield curve, it's a 10-year yield benchmark. So in US, it's almost 1.5 now, and the moment we start talking about this going up, dollar shows sign of appreciation, and that is what happened. Dollar index went up to 94 and is hovering around there. In
Yeah.
India, I mean, in US, it's I think because it is so much in news and people track it so closely that it's easier to understand what the central bank there intend to do. But do you have any thought on what Indian central bank is thinking from an interest rate perspective? Have they given any roadmap that they intend to increase, they intend to decrease, or they intend to continue to hold on to it for some time? Do you have anything in mind?
Okay, I think you are getting into a very interesting area, and in fact, for the benefit of all our listeners here, I just want to kind of caution that I'm saying caution here because most of the central banks, which kind of got into uh, uh, ultra, loose monetary policies or accommodative stance, they are talking about, or hinting at the policy normalization. Now,
Mhm,
if you look at US, I mean, Fed had its meeting on September 21st, where they hinted about, asset purchases, reduction in the asset purchases, which we normally refer as a tapper. And
mhm,
uh, I mean, even ECB in its meeting, I mean, which is the I mean, European Central Bank, the governor for Eurozone, Central Bank for Eurozone, they also talked about adjustment in the PEPP, Pandemic Emergency Purchase Program.
mhm,
All were introduced as a ad hoc measure to support the growth. I mean, post COVID, right? Now,
mhm,
we have seen Fed has been talking about, I mean, going for purchase reduction, and even that kind of hinted that, the first hike we may see in 2022. I mean, though we will still see, I mean, going forward that whether they remain on that or because of incoming economic data, there is a change. BOE, Bank of England, which is another major central bank, has hinted about it now. So that we should, I mean, some of the central bank governors have commented or talked about that we should look at asset purchase reduction. Now, coming to the India, I mean, so far, I mean, we have not heard anything from the central bank on that part, but some of the
mhm,
actions which they have taken in the last few days, again, I mean, it is my own personal interpretation that
mhm,
probably the kind of liquidity which is around in the system of 12 lakh crore, uh,
mhm,
they are finding it slightly tough to handle it, because
mhm,
uh, I mean, obviously, I mean, why do you infuse liquidity? Because you want that, the credit can increase in the system, the lending activity increases, but it may not be happening at a pace at which probably the central bank would love to do.
mhm,
So they keep, managing this liquidity through various operations. I mean, though it will all becomes little technical, Vivek, here, but
mhm, mhm,
what I am basically getting a sense that uh, they are basically trying to narrow the corridor on interest rate side. So
mhm,
right now
mhm,
what happens, I mean, just I let me try with a very simple way. Whatever is the surplus liquidity available in the system, right, in the banking system, banks go and park with RBI. If in case they are
mhm,
not able to deploy, or probably give the credit.
mhm,
So right now that happens at 335. I mean, that is
mhm,
reverse repo rate, what we call, and repo rate is the policy rate which is there. Now, this corridor is
mhm,
almost like 65 basis point. Now,
mhm,
RBI has been kind of, trying to manage this liquidity through reverse repo. Then they fixed reverse repo, then they moved to the variable reverse repo. So in the last
mhm,
auctions which they held, uh,
mhm,
they kind of were very aggressive in terms of bidding in the auction, right?
mhm,
I mean,
mhm,
they went up to, I think in the last VRR, which happened for 7 days on September 29, if I'm not mistaken, they
mhm,
kind of, bid up to 399. So,
mhm,
uh,
mhm,
I mean, the bond market participants and FX market participants, I mean, more from the bond perspective, uh, they
mhm,
take a cue. I mean, the participants try to take a cue that whether RBI is hinting that we may hear or see some kind of rationalization in this corridor, because we do have
mhm,
the
mhm,
monetary policy. I mean, RBI's policy on October 8th, and
mhm,
I mean, whether the action gets converted into action. I mean, whatever signaling which we are seeing finally gets converted into real.
mhm, mhm.
So, yeah, I mean, just to again, as I started, we are seeing policy normalization across the globe, and probably we are heading into a slightly volatile time. So I
Okay.
think it is not only going to be for FX, but it will be for all the asset classes. I mean, so if we have been talking about, so if you see, I mean, in the last 15 days, dollar rupee wall, which used to trade mostly below 4, I mean,
Mhm,
on an average, has shot up to around 4.5%. I mean the average. And similarly, you
mhm,
would have noticed even in Nifty or Bank Nifty, I mean equity, the walls have gone up. So
mhm,
as central banks across the globe go for the policy normalization, uh, the volatility is likely to go up. That's my way of looking at things.
true. So, I mean, all the learners who are live right now, I mean, there are almost 500 people who are live right now. I just want to make a quick suggestion that please try to understand all the big guys who participate in equity market with a lot of capital. They obviously don't look at chart and just make a decision of deploying 100 crores or 1000 crores by looking at charts. They try to make a very strong macro view on multiple assets. And I mean, whoever I know in the institution side, and I've been blessed because of my presence in markets, I know so many friends in multiple hedge funds and institutions. Currency is such an important part of their primary analysis because currency actually, the kind of perspective Vikas is giving, and we all are blessed to have him and talking so much with us and giving that depth of knowledge. But if you can follow 10 to 15% of what he said, you will get a 10,000 feet view on currency across the globe. And that is the first point of market volatility initiation. And trust me on that. I mean, I keep on saying this in my videos everywhere that dollar index is like Ganeshji. And whenever you are thinking of anything to do, you have to track that Ganeshji. And the deeper you get into dollar index, the deeper you get into the volatility in the dollar index and what is happening there, you will be the first person to know what will happen. So it is not just about those Bank Nifty Thursday expiries. It is more about building up a macro perspective on the market, and that's where these discussions become relevant. Now, because we have 6 more minutes, I'm very happy that we spent a lovely time. But now I wanted to talk about the futures market and options market in India, NSC or a BSC or wherever it is,
Yeah.
to give us a perspective. What can a guy do and what kind of contracts are listed? So, what kind of strategy can be deployed?
Uh, so again, let me set the perspective here. Uh, okay, I mean before that, since you talked about that how FX can help, I just want to add here. Uh,
Sure.
I mean, while I may be representing FX here, but I just want to tell to everyone that if you start tracking FX, right? I mean, if you start trading FX even with a small amount, probably your trading horizon will expand a lot. I mean, as I said in the beginning, that FX is the first derivative of anything happening in the world because of its sheer size, liquidity, 24 by 5 markets, uh, and probably I may be little too early to say that, but uh, I believe that that as central banks move towards the policy normalization, we are uh, kind of getting into the high volatility regime, because post COVID, all central banks, I mean, I keep saying this thing, even while writing sometimes, central banks kind of got into action to support the growth, uh, over committed to markets, but it cannot be like so ever. And if I'm not mistaken, we have already seen 12 central banks in the EMS space hiking the interest rate. I mean, Brazil has done that. I think Russia has also done. Turkey, I'm not talking about because it's a very volatile economy. In Asia, we have not seen action on that part. But point is, yes, as the policy normalization uh, is about to start, the volatility will not remain, which was the case we have seen in the last 17, 18 months post COVID, and we are going to see across all asset classes. So that's the thing. So coming back to the futures and options, so futures, I mean, you briefly covered in your initial statement that it was started in 2008, followed by options in 2010. Now, just to tell you some interesting tidbits here, that dollar rupee, futures volume, both NSE and BSE combined, is almost as high as Nifty futures. I know that most of us are option traders here. I mean, or love to do the option trading. Uh, so uh, so USDNR is fairly liquid. When I compare it with Nifty, right? I mean, so it is almost like at par with the Nifty futures. Now, on option side, and average daily volume in FX is almost $10 billion plus. Now, both NSE and BSE combined, and I am very optimistic that this volume is likely to further go up as we see more and more people, kind of get exposed to, thanks to even people like you who are trying to sensitize people about, currency, that we need to be multi-asset class trader. It gives you, 360-degree view. So more than $10 billion, with almost 80% volume concentrated in dollar rupee, and 75%, I would say, and rest 25% distributed across Euro INR, GBP INR, and JPY INR. Uh, uh, Now, interesting part is that, in the last 1 year, or broadly, I would say from December onward, right, when the peak margin was first introduced, right? I mean, the 25% thing, and then it gradually kept increasing. March, June, and September, it was 100%. The currency options volume have almost now reached to 70% of the total market volume.
Wow.
Yeah. So if some of you, I mean, some of the people are very active in option trading in Nifty, Bank Nifty. I mean, they can, and if in equity derivatives we see almost like 95% of the volume in options. I have no reason to believe that why this volumes, which is at 70% in dollar rupee options, uh, not to move to higher level to 80, 85% or 90%. So this is where, I mean, as of now, the uh, futures and options market are in dollar rupee. We do have weekly options as well as we have in equities, I mean Nifty. It expires every Friday. I mean, we have weekly expiries on Thursday. Here it is a weekly expiry on Friday. And interesting is that the weekly, I mean, both monthly and weekly expiries happen at 12:30 p.m. During the day, not at the end of the day, which is at 5 p.m. And reason for that is because it's a cash settled contract, so no hassle of delivery and all. And it expires or settles at RBI reference rate, which basically comes out at 12:30, and that's the logic and the reason for why currency contracts are, settled at 12:30 p.m.
Sure.
So
Sure.
and obviously, I mean, like in equity weeklies, we are seeing that the volumes are shifting here in our currency weeklies as well. So that's I think another important point which Vivek, in my interaction I have come across, and I think it is
Mhm.
important to tell people here, and we briefly covered that earlier, that spot market is the main instrument where the interbank trades, right? I mean, where
Mhm.
a large part of the volume is. Now, a lot, sometimes some of my clients have come and asked me, "Ki, Vikas, in Nifty or Bank Nifty, we have both the cash market and derivatives on the same screen, while
Mhm.
in currencies we don't have." And obviously, because spot trades in OTC, but you can see the prices of a spot as well.
Mhm. Mhm.
But the what I am trying to put across here is, some of the people, clients have come and asked me, in Nifty or Bank Nifty, it happens that derivatives, I mean the monthly futures trade at a premium or at a discount or at a par with the spot.
Mhm.
But in case of currencies, you don't see that.
Mhm.
So
Mhm.
I want to make a very important thing, make it very clear that in currencies, it is an interest rate play. And I think yesterday Vivek covered it very well also in your presentation on the currency,
Mhm.
that otherwise it will create an arbitrage opportunity. So
Mhm.
I mean, let me try to explain, I mean, add there. So it's spot, if today is trading at 74, your futures is trading at 74.20. So this 20
Mhm.
pack is nothing but your interest rate differential, and that
Mhm.
you will not see that futures will trade at a premium, at a discount to the spot.
Mhm. Mhm. Mhm.
And it is important to understand, because in Nifty and Bank Nifty, it is very common that I mean, uh, somebody asked me this question: ki, if tomorrow dollar rupee goes below the spot, right?
Mhm.
Does it
Mhm.
mean that the market sentiment has gone bad?
Mhm. Mhm.
So that is where I thought ki there is a gap in the understanding, and I think yesterday I covered that point also in my tweet, that what is the relationship between spot and future. So
True.
I mean, Vivek, help me out if I have been able to explain this part, that in case of dollar rupee or currencies, you will not be able to see that. So on October 1st, if a spot is trading at 74,
Mhm. Mhm.
futures will not come and trade below 74 or at par with 74. It will trade at par on the expiry day, because at the end, the
True.
spot and future has to converge. And why there is a difference? This difference is on account of the interest rate. Uh, uh, like, if in case US has an interest rate of 0.25%, which is right now their policy rate for 1 year, and
Mhm.
India, the interest rate is 4%, uh, for 1 year. So broadly, 4.5% for 1 year. So broadly, you will see that 1 year dollar rupee will trade higher to the spot by almost 4.25%, and which is nothing but
True.
your monthly, month on month futures premium.
True. So Vikash, forward premium and the whole concept of forward curve, which as an equity trader, people don't see because equity is all about first 2 months, whereas the commodity and currency trader, because we have seen those longer dated expiry contracts. So the relevance of forward curve is actually a very important science, which we will probably I would like to cover this in my YouTube video someday, maybe, and
Mhm.
explain this whole concept in length. But I think I have taken your commitment till 10, and today is Sunday, and obviously the time belongs to family, so I don't want to stretch it further. But it was lovely interacting with you. I'm sure the learners found value. We started with 500 learners. We are ending with almost 500 here. So I'm 100% sure that people found value in this interaction. And I'm going to host you again, and we are going to continue these sessions and empower people with right way of looking at the market. Again, I'm repeating the same thing. It's not about Thursday expiry option selling strategy. It's about building up yourself for a 30, 40, 50 year of career in financial market, which cannot happen with only one strategy in your armor. It has to be a multi-asset. And these initiatives from us will make sure that people out of people who are serious about it. I mean, there are many people who are entertainment seekers, but I'm sure that our audience, which is largely serious people, they are definitely going to take cognizant of this fact and focus on tracking these instruments. Not necessarily you practice, you trade, but at least start tracking it because you track today, and after 2 years, probably you'll be in a position to start giving serious money into this trade. Thank you so much, Vikas, for
Thanks,
this awesome session.
thanks, Vivek, and I would really appreciate that you pushed me hard to for this Twitter Spaces, and I hope we have been able to make some sense and uh, kind of give a direction to the people that how they can start looking at current looking at currency derivatives. I mean, Vivek, I can only assure you one thing that from our side we are trying our best to understand the need of the people, and accordingly we are making sharing the information both on the Twitter through our daily FX reports. We have also started a dedicated Telegram channel for FX where we keep sharing a lot of tidbits about what is happening in the global market. So that I mean, for good 10, 11 years, I was more of on the institution side. But it is interesting to see that there is a huge gap, and more than happy to help us the individual traders to understand this animal better. Thanks everyone for their time. Uh,
Thank you, Vikas. And guys, if you like this interaction, then you can send us some goodies over Twitter just by saying thanks and tagging me and Vikas into this Twitter if you feel like. And also, I would like to thank Kotak guys for supporting our endeavors. Kotak stands for knowledge. For many years, they have been into this industry, building up this industry through their knowledge initiatives. And obviously, we at Credit, Elearnmarkets, Stockage, we are obviously focused there. So it's a good marriage. And I hope all of us grow together as an ecosystem. Thank you, guys. Good night.
thanks.
Take
Thanks.
care
Good night,
and see you
everyone.
soon.